Welcome everyone. Mike Aboussie here with Chad Majors from Next Level Wealth Planning. We wanted to record a quick video to address the market volatility that we're seeing in the last few days. I know I've heard from a few clients over the last few days, and Chad, I know I've heard your phone ringing. What are you hearing from clients?
Yeah, I'm hearing basically I'm getting two different types of callers right now. I'm getting the client who wants to make sure everything's okay, that kind of worried if we need to make any changes to anything. And then also I'm getting probably more of this second type of callers that are calling asking, hey, are we close to a point where we need to become, buyers? Looking for opportunities with these lower prices that the market's provided.
Yeah, it's interesting. I'm having more folks trying to buy the dip than trying to sell as well. So you know what, Chad? I secretly like these times in the market because I get to hear from more of my clients and connect with them, not just on this, but on the personal side as
Yeah,
well.
yeah, that's
So
true. It is absolutely true. Yeah, I mean, and both callers are people who are trying to ultimately just do what's best. They want their portfolios to be safeguarded, protected, and last to provide for them, for years and years to come, hopefully for the rest of their lives. And yeah, it's the in these markets, it does provide opportunities, but it does make people nervous for sure.
no question. I look at my own portfolio at the end of the day and it makes me a little nervous.
Yeah,
But
sure.
one thing looking at client portfolios and my own, we do see some big negative numbers like on the S&P 500. The S&P is down over 13% on the year. But we're seeing some bright spots actually. Our bonds are positive 3.5%, and actually, international stocks are also positive over 1.5%. So diversification is working.
That's right. That's why we do it, folks. I know sometimes we look at our accounts and we wonder why we don't own more of, a certain area of the market. And the reason why is for times like this. So as we rebalance, and it is important we rebalance in times when things are going well, but also when things pull back, that we stay diversified because we never know what part of the market's going to be, the next winner. And it also helps to just lower that risk level across the board and make our, you know, give us a smoother ride with our investments. So,
Absolutely. Well, the market's changed in the last few weeks, but some things in client portfolios haven't changed at all. You were just telling me this a minute ago, Chad. What things haven't changed for clients?
the number of shares we own, right? Our shares, the value of the shares may drop a little bit. A lot of the stocks also pay dividends, and those don't drop either. So if we have a portfolio where we're relying on income, the dividend yields when the markets drop like this actually go up, and it gives us those are helpful because they allow us to sort of wait these times out and still get paid that income that we may need in our portfolios. But I really like dividend paying stocks at this time as well, just because now we're able to kind of get better yields and can wait times like what we're going through right now out a little better.
That's well said. So number of shares hasn't changed. Interest and dividends still paying into the accounts as always. That's great. Anything else?
No, I'd hang in there. We will be we're reaching out to people and receiving calls as well. Look forward to talking to everyone. If you have questions, give us a call. And anyways, hope everyone's doing good.
Yeah. All right. Well, hey, thanks for your time, and we'll talk with you soon.
All right. Thanks, Mike.